Hello and welcome back. All right, so we took our transaction log and we created journal entries. Then we took those journal entries and we put them in T accounts. Then we took the T accounts and put them into a trial balance. And now, my friends, we're going to make some financial statements. All right, so I've copied over our trial balance. This is what we prepared on the previous sheet. And we are going to use those numbers to create our 3 financial statements. We're going to do them in a very specific order. Ultimately, you can do them whatever order you want, but this is what's going to make the most sense, and I'm going to show you why. All right, so we're going to start with our income statement. Remember when we calculated net income, when we were trying to calculate the dividend? All right, so back then we learned that revenue minus expenses equals net income. That's all the income statement is. Here's my revenue, here's my expenses, subtract expenses from revenue, you get net income. Easy enough, okay? So first we're gonna type in revenue, and our revenue, if we look over on our trial balance, is 70,000. So we're gonna put that as 70,000. You don't need to worry about the debits and credits so much in this. We're just gonna put everything in as a positive number because we know the formulas we need to apply, okay? So then we are going to take our expenses, and I'm going to look over on my trial balance, and my expenses are $8,000. So 8,000. All right. So if my net income is revenue minus expenses, then I'm going to take my revenue minus my expenses. And again, just doing a formula for those of you who are interested. And I end up with net income of $62,000. All right, that's my income statement. That's it. Easy enough? All right, excellent. The next is my statement of retained earnings. This is basically just telling me how much of my net income did I keep, okay? And this is a roll forward. So we're going to start with our beginning balance. We're going to add our increases, subtract our decreases, and that'll give us our ending balance. So in this case, our beginning retained earnings are going to be 0. How do I know that? First of all, I'm telling you, this was our first year of operation, and you wouldn't have any retained earnings until at the end of your first year of operations. Also, if I had retained earnings, they would be in my trial balance. They would be probably between dividends and revenue. Okay, so I would see them there if I had a beginning retained earnings. I don't, so I'm going to put that as 0. Okay, so now I add net income. So my net income from up here is $62,000. I'm just going to put a little formula to add it. Okay, and then I'm going to subtract my dividends. So this is the one time I'm going to use a sign, and I'm going to say minus my dividends, which were $31,000. I put that in the wrong spot, didn't I? I sure did. Okay. So $31,000. So my ending retained earnings, if I add all of this up, equals $31,000. Okay. And so retained earnings is really all of the net income we've ever made minus all of the dividends we've ever paid. A dividend, again, is a distribution of earnings to our owners. So this statement really tells us how much of our net income have we kept? Have we kept inside the company over the years? It is waiting to be distributed at some point, okay? So that's the purpose of that. All right, the balance sheet. I call this one the granddaddy of them all because the balance sheet is, well, they're all important. They're all important, but if I only had to sneak a peek at one, it would probably be the balance sheet. But they're all important. All right, so the balance sheet. So before we get there, who remembers our accounting equation? All right, everyone put their hands up. I have it right here. Whether you remember or not, pretend you do. Assets equal liabilities plus equity, okay? That's exactly what the balance sheet is. We take all of our assets and we add them up. Then we take all of our liabilities and all of our equity and we add those up to get, and then we compare the two. And our assets should equal our liabilities plus equity. This is one of the many ways where we get to check our work in accounting. Remember here, our trial balance, we checked our work there. When we were looking at our journal entries, we could check our work there, make sure our debits equal our credits. And this is the final place where we get to check our work. If our assets equal our liabilities plus equity, that's a really good sign that we've done something right. If they don't, we need to go back and find out what happened. Okay, cool. All right, so we are going to just take these totals. This should not be underlined. Okay. And we're going to take them straight from the trial balance. Okay, so cash is 22,000, accounts receivable 40,000, inventory was 30,000, and equipment is 310,000. So we end up with, and I just already had the formula here. If I didn't, then I could just add it in. I could just do equals sum. And I'm not using the 402,000. I'm not using this just because I had it blocked with my face. I kind of have a big head, so I block things sometimes. All right. So my total assets are 402,000. So when I get to my liabilities plus equity, those better equal 402,000 again. But we're getting ahead of ourselves. All right. So our accounts payable, we're going to put that in there. That was 271. And that was our only liability. So our total liabilities, I can use this. Oh no, see, my head's still in the way. Okay, now I can use this if I want. And my total liabilities are 271,000. All right, now we're going to go down and stock 100,000. Okay, the next thing is retained earnings. So the next three accounts on our trial balance are dividends, revenue, and expenses, right? We already said revenue minus expenses equals net income, and the net income minus our dividends equals our retained earnings. So essentially within retained earnings, we have already reported dividends, revenue, and expenses. So instead of listing them out again on the balance sheet, we're going to save ourselves a little time and a little ink if we were printing this out, and we're just going to report those three items as retained earnings. So I'm just going to take my retained earnings from here, okay? So we're just consolidating things, okay? We have our statement of retained earnings, so people don't need it all laid out a second time. If they want to know specifically what were revenue and expenses, go to the income statement. If you want to know, hey, how much did we pay out dividends? Go to your statement of retained earnings. But here on the balance sheet, we're just going to give you the total. All right, so I'm going to add up my two equity accounts now, which is going to be stock and retained earnings. And that's going to be 131,000. All right, now the big moment. You ready? Boo. All right, drum roll. We are going to add our liabilities to our equity, and we get 402,000. Total assets are 402,000. So woohoo! See, there's not a lot of room for me to use my hands. All right, we equal. So that is a really, really good sign. It's not definitive that we've done it correctly, but it's a really good sign that we have. All right, so let's wait. I'm going to make myself bigger. All right, there we go. So those are our three financial statements. So you started with the source documents. You identified business transactions. You put them in your transaction log. You identified which accounts did we increase or decrease. Then you put those into journal entries, T accounts, trial balance, and finally the financial statements. So all of you are accountants. All right, give yourself a big hand, a pat on the back. And when we come back in the next module, we're going to learn all sorts of things to fine tune our accounting. We've got the basics down. This is really what we're going to do the rest of the semester. We're just going to add color and spice to it. All right, so well done. Go give yourself a break, and I'll see you back for the next module, which is going to be adjusting journal entries. All right, have a good one. Uh-oh, how do I turn this off? Ha ha!